Welcome back now. Vukile Property Fund has released its annual results. The group said the 2025 financial year had been a transformative year, highlighting the company's focused growth strategy in action, benefiting from selective acquisitions and investment disposals. Vukile said the year laid a strong foundation for continued growth. CEO Laurence Rapp joins us now with greater insight on that performance. Thank you so much for your time, Laurence. Let's actually start with that, just laying the table for us on the significance of this financial year for Vukile.
Tanati, hi. Thank you very much for having me on the show. Yes, as I said, we've grown the business, the direct asset base in Spain, by around 70%. In fact, when you take the assets that we acquired post-year end. When you look at that, and I think it's important just to delve into it, when we talk about that laying the foundation for future growth, it really is sort of three things. Number one, by achieving more scale, we become, I suppose, more able to drive productive discussions with tenants in terms of rental growth. We now own 21 assets in the area. We are probably one of the most significant landlords in our area. Number two, every deal that we've done has been very accretive. So if you have a look at the yield that we bought on relative to the cost of funding, you're going to see around a 400 to 450 basis point margin. So that obviously drives earnings growth in the year ahead. And then probably for me, the most exciting part is that all the assets that we've bought were bought specifically because they've got asset management and value add project opportunity. And that is something that's very much the hallmark of Vukile and Castellana. So really what we've done is bought ourselves a pipeline of future growth. And when you put those three things together, we believe that that augurs very well for future growth, real growth in sustainable earnings, short, medium, and long term.
A pipeline of future growth, and I'm sure obviously in the next year you will be working on really just growing your performance in those acquisitions. But also then I'm wondering, because Portugal is a new region there that you've expanded to, and I'm wondering how much more appetite then is there for acquisitions there in Europe?
So we certainly have ongoing appetite for acquisitions in Spain and Portugal. It's a question of finding the right deal at the right price. So we are always on the lookout. At the moment, we don't have anything that's yet ready to close, but certainly we are always evaluating. And I think now that we've got such a strong infrastructure in the market, to add on a bolt-on acquisition actually becomes quite easy. And you sort of start seeing the efficiencies come through when you do that, because you're really able to amortize your fixed costs over a bigger asset base. So short answer, we have a very strong appetite and continue to look for the right opportunities.
All right. Well, let's come back home and take a look at South Africa. Talk to us about the level of growth that you've seen in the South African operations, of course, considering that the economy is still seeing subdued growth.
Absolutely. I think the portfolio is performing superbly. We saw like-for-like NOI growth of 6.4%. Trading densities were up by 5.2%. Our all-important township and rural portfolio was up by 6.7%. So really seeing very strong performance in the majority of our portfolio. We were able to reduce vacancies even further. And importantly, at the same time as we reduced vacancies, we grew our positive reversions for now the third year in a row. And we're seeing about 85% of our leases that we are renewing being flat or positive. And that's a very strong indicator as to the strength of the portfolio and the demand from retailers to trade from our assets. So all in all, it's been a tremendous year in South Africa, very strong growth, and would expect to see that momentum continuing and hopefully increasing in the year ahead.
Just going into your balance sheet, I did see that the group hedge ratio increased significantly. What does that mean for the balance sheet?
Sure. I think really what it does is it takes out a risk factor. Obviously, one thing we can't control is the macroeconomy, what happens on interest rates, what happens with geopolitical issues, etc. We got to a point post-year end where we saw the forward curve pricing in 2 to 3 rate cuts, and we felt that that was sort of where the market would ultimately get to. So in other words, by looking forward, you can lock in those rates without waiting for the rates to have to get to that level. So by doing that, we've effectively taken that risk factor that is endemic in real estate
Yes.
off the table by hedging the interest rates, and that should now be stable for the next number of years.
All right. And in terms of your LTV, how comfortable are you with that at the moment? Is there runway to reduce that, or are you at comfortable, healthy levels?
I think the answer is both. I think we're at a very comfortable, healthy level. But at the same time, I think what you'll see is the LTV start unwinding due to property valuation growth.
Okay.
So really, we bought at the right time in the market. We saw this golden window of opportunity. We added significant scale to our business. Now, as interest rates are coming down in Europe, that should feed through into lower discount rates, lower exit cap rates, and that means that valuation should increase. So all things being equal, would expect to see the LTV unwind over the course of the year.
Yeah.
But it's a very comfortable position where it is.
All right. Laurence, you mentioned, of course, the macroeconomic uncertainties. Is Vukile bracing for any risks in the global economic environment that could affect operating dynamics within your portfolio?
I think one is always mindful of macroeconomic issues, but at the same time, I think we've hedged a lot of those risks. So interest rates we've spoken about.
Yeah.
So we've got fixed funding. Our next debt expiry in Castellana is in financial year 29. So that's a long way off. South Africa, we've got under 2% of our debt expiring this year. So I think we have no liquidity risk in the business. Interest rate risk is taken care of. And exchange rate risk, we have also hedged all of the dividends and the FFO coming from Castellana, but in a way that still allows us to benefit from any further weakening in the rand. So I think we are well positioned. Remember, Spain is largely energy independent, so whatever is happening in the Middle East shouldn't really have a big impact on the Spanish or Portuguese economy. So I think we are sort of well positioned from that point of view. Hopefully things settle down, but we don't see that as a major risk to our trading at the moment.
All right. Well, thank you so much for your time and just giving us more detail on Vukile's performance in the financial year. Appreciated, Laurence. That was Laurence Rapp, CEO of Vukile Property Fund.